Good morning, everybody, and welcome to Beat the Bell, presented by Kane Capital. It's a short trading week. We hope that everybody has been making the most of it. This will be our last Beat the Bell episode for this week. It is, of course, Good Friday. The markets are closed on Friday. But without further ado, let's get into the show. We'll start by introducing our panel, starting with Money Mander. Mander, good morning to you.
Good morning. Happy hump day, everyone. Let's get into the segment.
All right. Diamond Trades, good morning.
What's going on, guys? Like Hannah said, short week. Excited to get into it. We definitely have a lot to cover today.
Ramsay Rippers.
Without further ado, let's go.
And Moe Mamba.
Hondo, good morning, boys. Good morning. One more day. Tomorrow, that's it. Get a nice little break.
Sure. And Stock Snipa.
Good morning, guys. Happy hump day. Let's get to it. Let's make some damn money.
All right. Straight into Fed forecast, economic calendar. What do we got?
Yep. Let's go ahead and start with the economic calendar that we've got on schedule for the rest of this shortened week. And so today we had balance of trade come out at 8:30. We have a PMI number at 9:45 and 10, so that may provide a little bit of volatility for the markets. And then tomorrow we've got initial jobless claims. Friday we've got non-farm payrolls and the unemployment rate. Alejandro had mentioned that the market is closed on Friday for Good Friday. Futures are going to be open for a small period of time. I do want to just check and verify what times that will be, and I'll get that to you at the end of the segment. But futures should be open for a little bit, not very long. On Friday. So we have NFP on Friday and unemployment data on Friday. And that's going to add some color to the jobs market data that we got earlier this week. So the stock market had a pretty sour start to Q2. We've pulled back to start April here as job openings and some other economic data has come in lighter than expected. Job openings, which were reported yesterday for the month of February, came in at 9.9 million versus the 10.4 to 10.6 million expected. This marks the first time that the job openings have fallen below 10 million since mid-2021, showing the labor market is beginning to cool off as companies across the globe tighten their belts due to higher cost of capital, right? So this is the first step to easing labor market tightness, which we've seen all throughout 2023 so far. This could be what a soft landing looks like in today's economy, according to Ron Hederick from Lightcast, senior economist. NFP Friday should add some additional color to the state of the labor market, which we know labor market tightness has really been one of the primary driving factors behind the Fed's aggressive campaign against inflation. We can continue to be super aggressive on inflation if the labor market is going to remain tight. This may be the first sign that is no longer the case. Obviously, still pretty strong. I mean, we added 300,000 jobs. So not a weak labor market by any means, but it is cooling off from levels where we were before. And so if you want to see that happening, if you want to see this sort of soft landing, pulling back on economic growth without, causing massive unemployment, this would be sort of that first step that you would want to see, I guess, towards that theoretical soft landing. Two new additional signs of economic slowdowns that we got this week. The Commerce Department reported a 0.7% seasonally adjusted decrease in new orders and manufactured goods. And then secondly, the Atlanta Fed Now tool, which gives a real-time Fed outlook on GDP growth for the year, was revised down to 1.7% from 3.5% just 2 weeks ago. So the Atlanta Fed is essentially saying that they're expecting the growth of our GDP to essentially be cut in half from what they believed just 2 weeks ago. So the markets are pulling back here to start April, not for no reason, right? We do sort of have quite a few, new data points just coming out this week showing that, okay, maybe the economy is finally starting to feel some of those several rate hikes that we got last year. And if this is just the start, this is really, some of the first concrete data that we've seen of the economy sort of being impacted by these rate hikes. How much longer do we have to go, given that we saw unprecedented, 4 3/4 point hikes last year? I think that's what people are starting to recognize and sort of take notice of, and that might be part of the reason for the pullback that we've seen to start Q2 so far. Mander, what do you think?
Yeah, really interesting. And I guess it's pertinent that the Fed can't really predict negative GDP without inducing a recession, but that's a significant decrease. And we got that jolt data on the back end of the ISM manufacturing PMI print on Monday, which I wanted to cover. It came in at 46.3 for March, which was down from 47.7 in February and well below consensus of 47.5. So consensus was predicting a slight downtick, but it came in all the way down at 46, which pointed to the fifth straight month of a contraction in the factory activity of the country. And honestly, it was the lowest we've seen since 2009, excluding the COVID shutdown. Obviously, it was the lowest manufacturing print we've seen since 2009, with new orders, employment, and backlogs of orders really leading the decrease there. So I think with an economy that was kind of broadly upheld by consumer credit in 2022, it looks like the Fed's mission there of shocking the demand side of the equilibrium is starting to take effect. And Wall Street seeming to take the news as a bad news is bad news for once, right? They dropped the bad news is good news thesis of, the Fed being able to be more dovish. We really started to see these recessionary safe haven trades start to come into the market this week. So stocks are pretty much flat right now from the start of the week, but gold closed yesterday's session up 2.5% on the week, silver up 4.5%, and the TLT 20 plus year bond ETF there was up a little over a 1% on the week. So we have ISM service sector PMI coming out today. We have ISM service sector employment coming out today. And then as you hit on unemployment rate and NFP on Monday, I'm really curious to see how this data comes out. And if it keeps that same sentiment that we've seen with ISM and JOLTS to lead the week, it kind of just feels like the markets are holding on by a thread here, at least the stock market, that is, with the S&P top 5 there really holding us afloat. It kind of seems like your Apples, your Microsofts, Amazons, and Googles are getting looked at as a safe haven trade in similar fashion to gold and silver. But with the NASDAQ closing Q1 up like 20% year to date, I think if the rest of this data comes in a similar sentiment, we definitely see a little bit of a risk off here into earnings because demand is definitely decreasing in the economy.
Right. And you look at the Fed Now tool, they've got, I believe, the target rate at where we currently are. So 60% of the market participants think that we're not going to go any higher than the current rates. They're seeing a pause at the next meeting in May. And a lot of this data would start to back that up. Jerome Powell has, he came out in his last couple of meetings and said, the Fed is super data dependent and XYZ. And I think the market for so long has wanted to fade what Powell says. And I think that really comes on the back of the whole transitory incident that he had, several years ago. People still don't fully trust them, I think, just after that entire episode. And I think finally the markets and Powell are starting to come into more alignment where he's talked about, look, we can continue to be aggressive as long as things look good on the labor side. And this is really that first sort of hint that maybe things are starting to cool off on the labor side, which may actually lead them to a pause. And that's what the market thinks. And at least from what Powell has said in the past, that might be the way that he's thinking. So we'll have to see how it plays out going forward. And we'll have to see what that jobs data, which is actually on Friday, not on Monday. We'll have to see how that jobs data will impact where the market thinks rates are going to go. That'll wrap it up for us here at Fed Forecast. We'll pass it back to Alejandro.
Thank you, fellas. Let's talk about the system. As the guys were talking about, right now we're at a pretty tricky spot in the market after a 160-point rally. The market finally cooled off, first red day. So now everybody's asking themselves, are bulls buying the dip? Are bears starting to gain a little bit more of control? Luckily, we have the system to sort of guide us along. So here's the landscape coming into today. We did get the dip yesterday, but at the close, bulls stepped in exactly where they needed to, buying the dip at the 50 SMA on the 30-minute SPX chart. We can see how the 50 SMA is in a strong uptrend, clear momentum to the long side. You don't need anybody to tell you that, but visual representation, okay? On the 1 hour chart, we have the 50 SMA also coming up, strong trend on both the time frames. So in order for me to start to look for shorts, I would need to see a break below the 50 SMA on this 30-minute and a sell signal. I'd then have to measure the risk reward down to the 1 hour 50 SMA because we know that still has the potential to serve as strong support, okay? But coming into today, based off of yesterday's close, based off of the system and how it looks at the moment, bulls are still in full control. Above the 30, above the 50 SMA on both the 30-minute and 1 hour charts. So today, in my opinion, is very important for the Bulls. It needs to be a follow-through day. We need to see a bounce in order for them to remain in control. But I do expect things to get a lot more choppy, because what happened yesterday was, for the first time since the rally started on the 1 hour chart, we broke this 10 SMA. And that is significant. That is showing that even if we get a bounce today, okay, that extreme amount of momentum to the long side, where every single dip at this 10 SMA was being bought, that, at least in the short term, is over. Okay, so something to take note of. That's going to do it for the system. I'm going to pass it over to Ramsay Rippers for Bet the Bell. Do it for the system. I'm going to pass it over now to Ramsay Rippers for Bet the Bell. Good morning.
Good morning, guys. Alrighty. Good morning, guys. Let's get right into it. Ryan, pull up the stats. Let's see what the guys are. Let's see the standings. So Monday was a green day. We got Diamond, a couple losses, 2 losses in a row, I believe it is. It's looking
On your ass. On your ass, Diamond Trades.
Closer and closer. All right, let's get right into it. Green or red today. The indices are flat. SPY just tapped pre-market low. Nice bounce here, back up to 408. What do we think, guys? Green or red today, Alejandro?
I'm going to go green.
Diamond.
I am going to go green as well.
Whoa.
Oh, yeah. I'm going to go green.
I don't know if that was okay. That was an algo candle. My screen just popped all the way up to 409. Mander.
Might be my chance here. I'm going to take red. I think the ISM non-manufacturing data we get today sells us lower.
Mo.
Green.
What time do we get that, by the way?
10 a.m., I believe.
10. And Snipe.
I'm gonna go with red.
Nice. All right, cool. Ryan, let's pull up that chart for question 2. So as you guys know, I know that Mander and Diamond, they covered it on Fed Forecast today. Gold stocks hold a valuable place in asset allocation for investors, especially during times of fears of recession, inflation, and economic uncertainty. Investing in gold can be one of the best investments to gain exposure to that market overall through the S&P Gold Shares ETF, GLD. Now, GLD is not the same as gold mining stocks, which are much more volatile and subject to the whims of the mining industry and stock market. Gold has been rising on fears that we may be entering a recession, extended period of inflation. What do you guys think? Now, when we look at this chart, we see that GLD, this is the weekly chart actually dating all the way back to, I believe, 2019. 194 is the line in the sand, though, those all-time highs, or those highs from this extended period of time dating back to before 2020. 194, we're approaching that level very soon. It's been quite a rip to start the year, and on GLD, we're approaching 194. I believe we closed yesterday at 187. When we test, what do you guys think? Do we think we break through this 194 level, or another rejection is imminent? Mander.
Well, let's get the test first. Me and Mel are long here. But yeah, I love the uncertainty trade going up here. I do think this breaks through as we start to see some more economic downturn.
Mo.
Yeah, I can't deny it. I'm with Mander on this one too. Gold is too strong, and what's been coming out on the dollar too. I think this pushes it right through weekly resistance, and we're about to see some crazy moves on GLD.
Diamond.
I don't want to be a broken record, but I agree with the guys. I think, even if you don't necessarily believe to the full extent that people are trying to like treat it on Twitter, like America is dead and like the dollar is dead and like all that stuff, even if you don't fully subscribe to that belief, I think that at least a little bit of caution is warranted. And one way to do that is to buy some gold. Right. And so it makes sense to see gold pushing higher. And so I'm going to agree with the guys. I think that we break through.
Hondo.
Yeah, I think we're definitely getting up there. This move higher has been on a ton of relative volume. So buyers are really stepping in here. I don't think that this is a quote unquote fake out by any means. It looks like a really strong move based on the volume.
Gotcha. All right, beautiful. So yesterday we closed right on the dot. Snipe, you got any take on GLD?
I mean, I'm just going to say it's going to probably pull through resistance.
All right, beautiful. We're moving on. On the chart, SPX, we closed yesterday right on 4,100 to a T. We're probably going to open up in the 4190s, not really down too much, just about there, 4,100. You guys think we close the week over or under 4,100? 2 more trading days, Snipe.
You know, I'm going to take over. Actually, no, I'm going to say we're under. I'm going to say we're under 4,100.
Mander.
I'm going to say under as well, just on that same thesis. I think we see a red day today, and then not much until Friday. So we'll get the real move, I think, over the weekend, but I'll say under.
Mo. Muted.
Sorry. I think we close over. We do have NFP Friday, but market's not open. Just have to keep an eye on futures. I think futures will bring us down. We'll come down overnight, but on NFP that is. But I do think we close the week over 4,100.
Diamond.
Oh my, muted.
We had 2 in a row. Jesus. I actually am going to agree with Mo here. I do think that we have a chance to close over 4,100, particularly with the NFP on Friday. I think that's what really makes it interesting, right? It's not just a chart. It's sort of like what economic data you're going to get today at 10 and Friday as well. I'm going to go with Mo, though. I'm going to go over.
Last but not least, Hondo.
Nah, I'm just fucking with you. I'm fucking with you. Over 4,100 this week. Rip it. Rally into the end of the week. I want the Bears chasing the move lower. Oh my God, the sell-off recession. Recession my ass. Rally this week.
Let's go. Keep it right on Hondo. That's going to do it for Bet the Bell.
All right, Moe Mamba. Mamba market analysis. Let's do it.
Go ahead here and share my screen. It's massive. They were just infamous trend line right here. All right, what's up? Not muted. I'm not muted. I know that for sure. All right, guys. So SPY daily time frame here. We hit on this, the HNS that's playing out. Now, one thing I wanted to see was this 408. I was really hoping we'd continue to push higher, come into this 413 to 414 region, reject, and then pull back down into here. I was looking to grab puts up here for a short-term move, not completely come all the way down, but at least a short-term pullback, and see if we come up and retest this, maybe double top up here, or do we break through? And then we have a gap to fill up there. Of course, we did hit on this one before, 422. Not targeting that by any means at the moment. For now, I do want to see if we will get bought back up over this 408.3. This was the level I was looking for to be tested. That's what we got yesterday. Nice buyback over it. Really good. This looked bullish for me. Can still be bullish. We're gapping down a bit today, but we can still get a nice buyback. That's why I'm going green today. This was a bullish close for me, so I want to see a buyback over this level. If not, I'm going to expect further downside. We do have a demand zone down here, so that's something to keep an eye out for. I don't really like shorts too much at the moment right now, just because of this demand zone and then this the way this daily closed. So I do expect us to get bought back up today, and really important for me to see us come back and close above this level, this 48.3 level. If not, I'm gonna have to see us come down within this daily demand and maybe potentially chop. But we'll take it day by day. We'll see where we close at on the day. And keep up with my analysis on Twitter. I've been updating that almost every day, trying to keep up with it every day. But I do post an analysis on it every day, though. But this HNS is still intact at the moment. Let's see what we get today.
All right, thanks, Mo. That's going to do it for this morning's episode of Beat the Bell, guys. Appreciate everybody who decided to join us this morning. If you're on YouTube, if you could like and subscribe to the channel, that helps us out a ton. Other than that, guys, trade safe, trade smart, manage your risk. No Beat the Bell on Friday. Unfortunately, market is closed, so we'll be back on Monday morning. We will be trading live all day today and tomorrow per usual, in the Kane Capital Discord. You can go to kane-capital.com. Have a great rest of your day, everybody.